Hello and welcome, accounting students. In today's lesson, we are still focusing on partnerships, but we're now going to turn our attention to year-end adjustments and financial statements. So as usual, before I get started, I'm going to remind you guys to have pen, paper, your calculator in front of you so that we are working, we are learning together. So let's get started. Right, now as accounting students, have you wondered how the financial statements of a sole trader is different from a partnership? So that's what we're going to look at. How is the statement of comprehensive income, the statement of financial position, how are these different in terms of a partnership versus a sole trader? So let's move on. Right, so remember guys, looking at the big picture, we've obviously focused on unique transactions. We use the accounting equation for that. We also looked at ledgers as well as final accounts. What happens at the end of a financial statement? What are the final accounts that are drawn up? So in today's lesson, our key focus will be on financial statements, including notes to financial statements. Right, now some of the key concepts that I want you guys to focus on that we obviously going to come across in our lesson are as follows. So your statement of comprehensive income. Now remember previously we called this the income statement. Some of us are still used to using the term income statement, but remember I want you guys also to call this the statement of comprehensive income. Income statement is the old terminology. Similarly, statement of financial position. Previously, we obviously referred to this as the balance sheet, but remember the name has now changed and we need to get used to the new terminology, statement of financial position. Right, then another key word that you're going to come across, primary distribution of profits. What do we mean by primary distribution of net profit? As well as final distribution of profits. So please remember, as I'm completing today's lesson, we're obviously going to come across these terms, and I want you guys to take note of the difference between primary distribution versus final distribution. Right, let's carry on. Okay, so as accounting students, what happens at the end of a financial year? Now, from an accountant's perspective, we obviously know we draw up final accounts. So in our general ledger, we draw up the trading account, the profit and loss account, as well as the appropriation account. But remember, not everyone understands ledgers, including perhaps the owner or the partners. They don't necessarily have that accounting background. So as the accountant, you then take the ledger and you present it in the form of financial statements, which is much more reader friendly. So whether or not you understand accounting, you will understand statements. So hence the reason for us preparing financial statements. Because remember, as accountants, all we need are ledgers, and we can make important financial decisions based on the ledgers that we prepared during the course of the year, but not everyone understands accounting. Therefore, we take the ledgers and we now present the ledgers in the form of financial statements. The accountant will draw up financial statements which consist of your statement of comprehensive income, which obviously is the income statement, to determine net profit, and then also will draw up the statement of financial position showing all your assets, equity, as well as liabilities. So again, this happens at the end of the financial year. Okay, let's move on. Statement of comprehensive income. Now remember guys, you've done this before. So when you were the accountant of a sole trader, you drew up the statement of comprehensive income. Is this now going to change? So let's find out. Remember, there are no changes to the statement of comprehensive income, and here I'm referring to in a partnership. It's exactly the same or very, very similar to your sole trader. Additional income and expenses may include profit or loss on sale of asset, provision for bad debts adjustment, and then you could come across a partner could be taking stationery or any other consumables for personal use. So I've given you examples of additional year-end adjustments that affect the statement of comprehensive income. However, the layout of your income statement, statement of comprehensive income, is exactly the same as a sole trader. So in other words, you're still going to start off with sales, cost of sales, work out your gross profit, add other income, minus other operating expenses, and so on. So that's not going to change. Right, let's move on. Statement of financial position. Does the balance sheet change? And the answer to that question is yes. So if you look at your statement of financial position for a partnership, the equity section of the balance sheet, guys, please remember, when I use the word balance sheet, remember, I'm referring to the statement of financial position. Okay, it's going to take me a bit of time to get used to the change in terminology, but I know you guys know exactly what I'm talking about. So what are the changes that's going to occur in the balance sheet? So you're going to find in the equity section of the balance sheet, remember we've got A, then we've got O, and we've got L in our balance sheet. So obviously I'm referring to the owner's equity section. So the following changes are now going to take place. You're going to include capital as well as current accounts, and you're going to find that there will be a note prepared for capital and a note for each partner's current account that will then be reflected in the statement of financial position. Okay, right, let's move on. So looking at the capital note, and I've got a quick example here to show you how the capital note is going to change. We're going to list the names of our two partners. Remember, in your syllabus, you will come across two partners, not necessarily more than two partners. So in this particular note, I am going to show their capital balances at the beginning of the financial year. So if we look at the example that is in front of you, partner Anele contributed 1 million, while partner Vish contributed 1.5 million. So obviously this is their opening balances at the beginning of the year. Then looking further, what was the additional capital each partner contributed, or was there a decrease in capital contributed? Now remember, they could be both. Partners could increase their capital, additional capital, as well as decrease their capital during the financial year. So this is now reflected in the note. So looking at the example, Anele contributed an additional 300,000, while partner Vish decreased his contribution, hence the brackets to show that capital is now decreasing. He decreased his capital by 200,000. So as you can see, this is reflected in the note. And then finally, what are their balances at the end of the year? So if you look at Anele, her capital increases to 1,300,000, while partner Vish, his capital obviously decreased by the 200,000 to 1,300,000. Okay, so clearly we can see that the changes are reflected in the note, the capital note. Right, let's move on to the next change. So our next change in the statement of comprehensive income, statement of financial position, not comprehensive income, financial position, is the current account note. Now remember guys, while doing a sole trader, we never prepared this particular note. So obviously this is now completely different, completely new. Right, so what are we going to find in this current account note? So the current account note indicates the primary and the final distribution of net profit amongst the partners. Right, so what do we mean by primary distribution? Here we're referring to the annual salary that was allocated to each partner, their interest on capital, as well as any bonuses that were given to partners. So that's what we mean by primary distribution. Final distribution, on the other hand, looks at the sharing of remaining profits. Now, right now, I'm obviously discussing the note, but in our next segment, I'm going to do an example with you. But I want you guys to listen, take note of the terms that I'm explaining. Right, what else does the current account note indicate? It's going to also indicate the amount of drawings of each partner for the financial year and their respective current account balances at the end of the year. So in other words, drawings, how much for the year they've taken from the business, and then at the end of the year, remember we discussed this in the previous lesson, what you were entitled to take versus what you've taken. So for example, I was entitled to 100,000, I have taken 90,000, and at the end of the year, I end up with a balance of 10,000. That is my current account balance. Obviously, it's favorable because I haven't taken everything that I was entitled to take. Okay, right. Hopefully, guys, that made a lot of sense. What I want to do now is I actually want to stop. I want you guys to go out for a quick break, whether it's to the kitchen to grab that glass of water, whether you want to walk around a bit, do that. And when we return, we will go straight into an example where I'm going to draw up the current account. So I'll see you guys in a bit. Hello and welcome back, guys. Hopefully you were able to stretch a bit, and now we can continue with our accounting lesson. Now remember, before the ad break, we obviously looked at changes to the financial statements in terms of a partnership, and the big changes take place in the statement of financial position with the capital note as well as the current account note. Right, so let's now do an exercise together, and hopefully this is going to make sense. You guys are going to remember how to do this. Remember, this is quite a bit of revision that we're doing at this stage, work that you already know how to do, and I'm hoping this is going to help you revise these concepts. So let's begin. Okay, so the example that we have, or we're going to complete together, use the information given to draw up the current accounts of AV Traders, so that's the name of our business, for the year ended 28th of Feb 2021. The business is owned by partners Anele and Vish. All remaining profits are to be shared equally between the partners. Right, so let's go on. So we are given the following extract from the ledger as at 28th of Feb 2021. Net profit calculated amounted to 1,400,000. So obviously this is coming from your statement of comprehensive, okay, income. Right, so the net profit given to me, I don't have to calculate that. And then I'm given information in terms of current account balances on the 1st of March 2020. So obviously at the beginning of the year. Then they've also given me drawings for the year for both partners, their monthly salary, and immediately monthly salary, I'm going to remind myself I have to multiply this by 12 because I want their annual salary. Interest on capital already given to me, so I don't have to calculate. Remember, normally this would require a bit of calculation, and then there is a bonus that is given to Anele. Now guys, very quickly, I do want to mention, and I think I mentioned this in my previous lesson, some textbooks have done away with bonuses. I know some schools also don't really show bonus as part of the calculation. I'm including this just in case. But remember, if you haven't done bonus in class with your teacher, then obviously they're not going to give this to you in a test or an examination. I just wanted to clarify that before we continued. Right, so next bit of information, okay, that's it. So there's my current account note. So I don't have any additional adjustments. So let's get started with this note. So remember guys, your starting point is always net profit for the year. So if we go back to our information, our net profit for the year is 1,400,000. So I'm obviously filling that in. So 1,400,000 net profit for the year. I am now going to start sharing this net profit. So remember, each partner is entitled to the annual salary. So let's start with the annual salary. Let's go back. So Anele, her monthly salary 28,000, but remember, I need to obviously multiply this by 12 to get her annual salary. So let's just get the calculator out. Right, so Anele, 28,000, and obviously I'm multiplying that by 12 to give me her annual salary, 336,000. So 336,000. I want to fill that in before I continue. So Anele, 336,000. We're going to do the exact same for partner Vish. So his monthly salary, not annual. So his monthly salary is obviously 30,000. And once again, I'm multiplying this by 12 in order for me to get his annual salary. Okay, so 30,000, one more zero, times 12, and that gives us 360,000. So 360,000, and again, I'm taking this to my note. Okay, 360,000. Right, so if I look at the total salary allocated thus far, remember I'm now simply adding these two amounts to get my total. So I'm just going to get the calculator out. So 360,000 plus 336,000, and that gives us 696,000. So 696,000. Right, salary sorted. Let's move on to interest on capital. Okay, so my interest on capital, remember normally I would have to calculate interest on capital, but they've been very kind and they've given me the amounts already. So Anele, 71,000, Vish, 80,000. So let's fill that in. 71,000 for Anele. So I don't have to do the calculation, it's given to me. And then partner Vish, an amount of 80,000. Okay, 80,000. And once again, in order to get my total, I'm adding, and that should be 151,000. Okay, I'm just going to quickly double check that. Right, so 71 plus 80, just leaving out the naught, 151,000. So that's correct. Right, Anele did get a bonus. I need to include this as well. So bonus. And if I go back to my information that is given to me, so bonus given to Anele, an amount of 30,000, and I can fill that in. So 30,000. Right, partner Vish, for some reason, did not get a bonus. Maybe he doesn't work on weekends. Anele does, so she's entitled to that bonus of 30,000. Okay. Right, shouldn't be so difficult so far, guys. I've recorded salary, interest on capital, as well as bonus. Now, remember what I said earlier on, before our ad break, primary distribution. What do we mean by primary distribution? So primary distribution is simply the sum of salary, right, plus interest on capital, plus bonus. That gives us primary distribution. So we're going to quickly calculate our primary distribution for each partner, and I'm going to put this into a block so I can show this as a calculation. Right, let's get our calculator out. Okay, let's look at Anele. So 336,000 was her annual salary, plus the 71,000 being her share or her portion of interest on capital, and plus that bonus of 30,000. Okay, and that gives us an amount of 437,000. So 437,000. Right, we're going to do the exact same calculation for partner Vish. So we've got 360 plus 80,000 again. I'm going to put that into a block to show that I'm adding these amounts. Right, let's just quickly move that so you guys can see. So 360,000 plus the 80,000, and that gives us an amount of 440,000. So 440,000. Okay, you guys with me so far? Right, so our total primary distribution, I'm simply adding these two amounts to get in total what is the primary distribution of both partners. So once again, I need my calculator. So 440,000, right, that was partner Vish, plus 437,000. And in total, thus far, we've given our partners, our primary distribution, 877,000. So 877,000. Right, now often I find this is where our students get confused. So I want you guys now to pay special attention to the next calculation. So primary distribution is now sorted. Let's now look at final distribution. Now, the word final distribution refers to your remaining profits. Now, again, guys, I explained this in the previous lesson, but if you've forgotten, let's do a quick recap. Net profit for the year is 1,400,000. We all know that. Net profit, all my income minus my expenses. What is my net profit for the year? Remaining profit, on the other hand, is after giving my partners salary, interest on capital, bonus, after subtracting these amounts from net profit, what is that profit left over? What is that remaining profit? So that is what we're now trying to work out. So basically, what I'm doing is I am taking 1,400,000, my net profit, and minus whatever I've distributed between the partners thus far. So minus 877,000. Okay, and that's going to give me my remaining profit. So let's work that out, our remaining profit for the year. Okay, so we've got an amount of 1,400,000 minus 877,000, and the profit left over or remaining 523,000. So 523,000. Right, so this profit now also needs to be shared between the partners. So let's go back to our information to see how are we going to share this profit between Vish and Anele. So let's go back to our info. Okay, so looking at the information, I think it was at the beginning of the exercise, right? The last point, all remaining profits are to be shared equally between the partners. Right, so equally, very simple, very straightforward. All I'm doing is I'm taking my remaining profit and I'm simply dividing this by 2. Okay, you guys with me? Right, so let's do that. Let's get our calculator out. Right, there's my remaining profit. So I'm simply dividing it by 2 because obviously sharing equally between the 2 partners. So each partner is entitled to a share of remaining profit of 261,500. So 261,500, and that is my share of remaining profit. Okay. Right, so let's fill all of this in, and what I'm going to do is I'm going to quickly change the color of my pen just to make sure that we are all on the same page, right? I know sometimes using a different color pen just kind of helps. Right, so remember my remaining profit, right? Final distribution, remaining profit, 523,000, okay? 523,000 was shared equally between the 2 partners. So each partner's share of remaining profit, 261,500, 261,500. Okay, right, now that that's done and dusted, let's now look at, in total, what was Anele's share of the remaining profit as well as her primary distribution. What was her share in total of the net profit? So I'm now taking primary distribution plus final distribution. So let's do that quickly. Right, 261,500 plus 437,000. Okay, and that gives me her share amounts to 698,500. So let's just go back. Okay, so 698,500. Right, we're going to do the exact same for Vish. So his primary distribution plus final distribution will give us his share of net profit. So let's grab the calculator again. Okay, so let's clear that. 440,000 plus 261,500. And his share of the remaining profit, sorry, not remaining, his net profit share, an amount of 701,500. So an amount of 701,500. Right, now at this stage, guys, you can check that you haven't made a mistake. So remember, if I take Anele's net profit plus the net profit for Vish, I must get total net profit for the year. So let's see if I made a mistake. Hopefully I didn't. So 701,500 plus 698,500, and that should give me, holding thumbs, 1,400,000. So as you can see, I didn't make a mistake. Okay, right, almost done with the note. So the next bit that we now need to fill in is drawings for the year. So I just want to quickly go back to my blue pen. Let's just do that quickly. Right, so my drawings for the year, drawings must be in brackets. So if I go back to my information, drawings for the year, Anele has taken 450,000, whereas Vish has taken 460,000. So let's fill that in. 450,000 for Anele. Okay, and then Vish has taken 460, so let's fill that in. 460,000. Okay, right, total drawings for the year. Let's grab the calculator quickly. So obviously 450 plus 460, and total drawings for the year 910,000. So in brackets 910,000. Okay, right, next step for me to now work out whether each partner has taken either more than they were entitled to or less than they were entitled to. So now I'm going to compare drawings, what they've taken, to what they were entitled to in this financial year. So let's look at Anele. So I'm now looking at the net profit for the year for Anele versus the drawings that she has taken. So let's grab our calculator. Right, net profit 698,500 minus her drawings for the year 450,000. Right, and that gives me a favorable balance of 248,500. Favorable because obviously she's still entitled to take more from the business. As you can see, drawings is much less than her share of the net profit. So 248,500, 248,500. Now let's go to her balance at the beginning of the year. So Anele had a favorable balance of 2,000 at the beginning of the year. Remember, if it was unfavorable, then in brackets they would tell us it is debit. But because there's nothing next to it, I know that this is credit. So 2,000, let's take that through. So an amount of 2,000, and her balance at the end of the year, right, she's got a favorable balance of 248,500 plus the opening balance of 2,000, and that gives us an amount of 250,500. Right, so let's fill that in, 250,500. So 250,500. I just want to double check that I haven't made an error. 250,500, correct. Right, let's do the exact same now for partner Vish. So once again, we are comparing drawings for the year to his net profit for the year. Okay, so his net profit for the year, 701,500. Just fix that. 701,500 minus drawings for the year, 460,000. Okay, that should be correct, and that gives us also a favorable 241,500. So 241,500. Okay, and now let's go back to his balance at the beginning of the year. So again, he's got a favorable balance of 4,500. Normally in the question, there will be a credit or a debit, but obviously credit implies it is favorable. Right, so 4,500 is his opening balance. So let's go and fill that in, 4,500. And at the end of the financial year, his current account balance is an amount of, let's get the calculator out, 241,500 plus opening balance 4,500 to give us an amount of 246,000. So 246,000. Okay. Now, obviously, guys, we totaling to get each total. So let's do that as well, right? So if I look at my total in the end, right, there's many ways in which you could do this, but let's do each one. So 248,500 plus 241,500, right, so that gives us 490,000. I just want to fill that in, 490,000. Right, and then I've got my opening balances, 2,000 plus 4,500. I don't need a calculator for that, so obviously 6,500. And then finally, at the end of the year, I should get an amount of, let's get the calculator out. So at the end of the year, 490,000 plus 6,500. And to the statement of financial position, I will take a total of 496,500. So 496,500. And remember, if I add horizontally, right, if I add these amounts, I should obviously get the same total. Let's just quickly check that we do get the same total and that we haven't made any errors. So 250,500 plus 246,000. Okay, and there we go. It should be the same amount that we've got. Yes, it is 496,500. Okay. Right, and this is the amount I will then take to my statement of financial position or to the balance sheet. Right, guys, I know you're probably dying for a break. You need a break desperately. So let's do just that. Let's take a quick break. And when you guys return, we'll obviously continue with year-end adjustments. Welcome back, accounting students, to our final segment in today's show. Remember, we were busy looking at year-end adjustments and we completed the current account note. We're now moving on to an adjustment that affects stationery. So let's look at the next adjustment. Right, so the information that is given to me, I'm required to show the effect of the following year-end adjustment on stationery in the statement of comprehensive income. I'm given a balance as per the pre-adjustment trial balance at the end of the year, 28th of Feb 2021. Then I've got consumables on hand, stationery, 1st of March 2020, so obviously at the beginning of the year, there is stationery on hand, 450 Rand. Then stationery that was purchased in this financial year, an amount of 16,800. So let's read on. Right, my year-end adjustments affecting stationery, the accountant forgot to reverse the stationery on hand at the beginning of the year. So this is something we already know because we never come across consumables on hand at the end of the year, right? Normally this is reversed, but clearly this has not happened. Right, next adjustment, partner Vish took stationery 800 Rand for personal use. And then finally, stationery on hand at the end of the current financial year amounted to 1,000 Rand. Right, now in order for you guys to understand this adjustment or these adjustments in detail, I would prefer to draw up our ledger accounts, stationery, as well as an account for consumables on hand. So let's start by just bringing down the balances for each. So let's start with consumables on hand, obviously an asset, So at the beginning of the year, stationery on hand, not reversed, an amount of 450 Rand. So let's just take that through, right? So on hand, 450. And then stationery purchased for the entire year, an amount of 16,800. So I just want to take that through to the ledger as well, 16,800. Right, so let's start with our very first adjustment where the accountant forgot to reverse the stationery on hand at the beginning of the year. Now, what does this mean in very simple terms? At the end of last year, there was unused stationery, probably locked away in the cupboard or in the storeroom, amounting to 450 Rand. Now remember, unused stationery obviously becomes an asset for the business. But this was at the end of last year. Now, if you think about the current financial year, that unused stationery is not going to stay locked up in the cupboard. It's going to get used, right? Obviously, that stationery will be taken by the employees and they're going to use the stationery. So at the beginning of the financial year, the accounting procedure is reverse this entry. In other words, it's no longer going to be an asset, make it an expense. So we have to transfer 450 Rand back to our stationery ledger account. Now, how does this affect your financial statements? Because that's what you are interested in. So at the beginning of the year, right, remember consumables on hand, because it should be reversed, in your inventory note, you are not going to show the 450 Rand. I'm obviously talking about your inventory, right, your balance sheet note or statement of financial position for the year end 2021. So you will not show consumables on hand 450. Okay, you guys got that. Right, stationery, obviously by transferring 450, my expense now increases by 450. So in your statement of comprehensive income, in the income statement, we are now adding the 450. In fact, let's do that because that's part of our answer. Right, so stationery, we started off with 16,800. We're now adding that reversal that should have taken place but didn't. We adding the 450. Okay, right, so that's the first part to the adjustment. Let's now look at the next part. Partner Vish took stationery for 800 Rand for personal use, obviously for his own use. So because this is not a business expense, once again, we're going to have to make a relevant entry in our ledger account. So remember, stationery will be credited by 800 Rand, right? And the other account affected is obviously drawings for Partner Vish, where his drawings will increase by 800 Rand. Right, guys, I just want to make it very, very clear that this adjustment does not affect, right? Remember, we did a current account note earlier on, but I just want to make sure that no one gets confused. I wasn't given this adjustment for that question. So that is why I didn't include the 800 Rand. This is now something completely separate, and I don't want you guys to get confused. So just to make that, just to clarify that. Right, so 800 Rand, I'm obviously now going to remove the 800 Rand from stationery. It's not a business expense because it's been taken away by the partner for personal use. So let's do that. We're obviously minusing 800 Rand. Okay, right, let's move on to our final adjustment. Stationery on hand at the end of the current financial year amounted to 1,000 Rand, right? So let's quickly look at that. So that 1,000 Rand, remember, this is now my stationery on hand at the end of the year. So in other words, unused stationery an amount of 1,000 Rand that needs to be transferred to consumables on hand. Because it was not used, this is now going to get locked away in the cupboard. It's unused stationery, or it's the stationery still in the cupboard at the end of the year, and that 1,000 becomes an asset. So how does it affect my expense? Obviously, I'm going to subtract the 1,000 Rand. Okay, right, so let's do that on our answer sheet, minus 1,000 Rand. Right, and our stationery expense for the year, if we just quickly grab the calculator, so our expense for this financial year, 16,800 plus the 450 that we reversed, minus the 800 that Vish took for personal use, and minus the unused stationery, minus the 1,000 Rand. So our expense for this financial year, 15,450. So 15,450. Okay, right, and that's it with this adjustment, although I do want to quickly just go back, guys, right, because I just want to make sure that no one is confused. Right, so remember this 800, had it been one comprehensive exercise where I was continuing from the previous exercise to this, I know with the names it might sound like, but hang on Mahesh, it seems like you're continuing, right? If I was continuing, remember that 800 would then be added to Vish's drawings account. Okay, but remember, I didn't get this adjustment when I was doing the current account. Okay, I just wanted to clarify that, guys. Right, it seems as though we've come to the end of our lesson. So very quickly, guys, remember, you're going to get a whole lot of year-end adjustments that you need to practice from. And the more you guys are going to practice, the better you're going to be at year-end adjustments. But what do I want you to take out of today's lesson? So remember, to summarize, make sure you know the format of your capital and current account note. Obviously, this affects partnerships directly. And then make sure exactly what I mentioned a few seconds ago, that you are practicing your year-end adjustments. All your year-end adjustments, the ones you did in grade 10, as well as the additional adjustments, asset disposal, provision for bad debts adjustment, and so on. Make sure that you guys practice. Right, also calculations, practice these as well in respect of interest and capital, drawings, sharing of remaining profit, salaries, and so on. And very, very important, I think I say this at the end of every lesson, make sure you read your given information carefully. Make sure you're able to analyze and interpret that information. Okay, right, and like I said earlier on, we've come to the end of our lesson for today's lesson. Obviously, we've covered quite a bit already, but I want you guys, just promise me you're going to practice, because the more you practice, the better you're going to get in terms of your accounting. Remember, as accounting students, I cannot open a book and simply look at the book. I've got to physically practice. Okay, so that's it from me, Mahesh Lal. Until we meet again, it's goodbye and God bless, and please be safe.